Welcome to Drill Down Earnings. We have the latest quarterly results from Cisco. Fourth quarter results. Fiscal fourth quarter results is the business story behind one stock on the move. I'm Cory Johnson, Chief Market Strategist for the Futurum Group. And we look at Cisco, and yes, we look at Cisco a lot at the Futurum Group. We look at it a lot more deeply than Wall Street does. Wall Street just likes a beat or a miss, and this was a beat in terms of earnings. But the expectations have been lowered quite a bit after some rough quarters, particularly last quarter for Cisco, when they surprised the market with kind of a tough report, a challenging report. And indeed, while they saw product order growth for this company of 14%, and yes, it was on the high end of the range of guidance, don't be fooled. Revenue growth, it was 10%. Not as bad as last quarter, but negative 10% revenue growth, revenue shrinkage, if you will. As we often say in this broadcast, shrinkage bad, growth good. And there was some growth, the operating margin of 19%. It has been eroding, but a little bit better than it was last quarter. Now, when you think of the business of Cisco, and you think of software, of security, observability, collaboration stuff, look, at the end of the day, networking is still 69% of revenues for this company. That's what it was in this quarter. And the networking business just isn't good right now. It was down 28% on a year-over-year basis, and that's rough for this company that depends so much on networking. However, the acquisition of Splunk has really helped them out in their security business. The result is they had 81% growth over last year because they've added Splunk and their security business is doing okay. They were asked in a conference call in particular if they saw a pickup in growth in the security business because of the CrowdStrike hack that happened a few weeks back. They were non-committal about that, just bullish about the security business. Now, the solid growth in security, you can really see how Splunk added to what they've been doing in this business for quite a while, doing over $1 billion or about $1 billion every quarter, but now that's at about $1.8 billion. Really strong. So how did the stock react when the numbers came out? Well, when the guidance suggested that things were getting better and the worst, not to mention layoffs, my goodness, what a horrible thing for so many people losing their jobs at Cisco. That meant fundamentally that things, maybe the bottom is here. The stock is up 6% in after hours trading after losing 15% in the last year. It's also worth noting that inventory, which had been growing for a very long time, is stuck at 62 days. At least it's not getting worse, because it had been for some time here. Now, lots of questions to Cisco CEO Chuck Robbins, guy that we like a lot. Here's what Chuck Robbins had to say about this quarter, specifically about what counts as AI revenue and what's just revenue.
It's going to get more and more difficult to really identify orders that are AI related, because as I said earlier, we're beginning to see enterprises now that are updating their infrastructure as a result of AI. So does that count as an AI order or not? But anyway, we're going to stay pretty pure to how we've measured them so far as we continue to update you on these numbers.
So AI helping results, security certainly helping results, but the number is down. So what's our big takeaway? What's our drill down earnings takeaway? And indeed, what's the drill down earnings bites? The one number that tells us a whole lot about Cisco's fiscal fourth quarter. I'll have that for you right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Cisco fourth quarter earnings for their fiscal fourth quarter. Here's an essential summary of drill down earnings takeaway. While orders were up, revenues were down 10% on a year-over-year basis to $13.6 billion. And while networking is most of their business, the drill down earnings bite, the one number that tells you a whole lot is the number I want you to remember. They had 81% growth on a year-over-year basis in their security business, principally from adding Splunk, but also because the business is doing just fine, thank you very much, which helped make up for the 28% decline in networking. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. And check me out on X at Cory TV, Drill Down Pod and TikTok and Instagram, and check out all these other videos as well right here on the 6.5 Media page on YouTube. Hope you dig it. Leave some comments on the socials. Let us know what you think.